Hey everyone, welcome back. Today, we're going deep on something I think is really interesting, and that's the language companies use, especially when they're talking about future earnings. You know, that whole earnings guidance thing.
Yeah, it's kind of fascinating, right? Like companies have to walk this tightrope. They want to be transparent, obviously, but they also want to present themselves strategically, especially when it comes to, talking about how much money they're going to make.
Exactly. It's a tricky balance for sure. And that's actually where this research paper we're looking at today comes in. It's called Sentiment Management, AI-based evidence from earnings guidance. Have you had a chance to look at this one yet?
Oh, yeah, it's a really cool study. They actually use this AI tool called FinBERT, which is amazing. It can actually analyze the sentiment of text. So it goes way beyond just like counting positive and negative words.
Wow, so it's like reading between the lines, kind of.
Exactly. FinBERT understands like the nuances of financial language and can tell if a sentence is positive, negative, or neutral. Even if there's like sarcasm, it can figure it out.
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
That's incredible. So much more sophisticated than just, basic word counting.
Right. And that's what makes this research so interesting. They were able to measure sentiment much more accurately than ever before. And guess what one of the first big findings was?
I'm on the edge of my seat. Tell me.
Okay, so companies tend to use a lot more positive language in the titles of their earnings guidance press releases, even when the news itself is not good news.
So even when they're basically about to deliver bad news, they're trying to make it sound good.
Yeah, exactly. The paper gives this example. There was this one company, their earnings were projected to be way below what analysts were expecting, like not a good situation at all.
Ouch, that's gotta hurt.
Right. But you know what their press release title was? Company provides update on business outlook.
Update. That sounds like almost positive. You'd never guess they were about to drop a bomb on everyone.
That's exactly the point. It's like classic sentiment management. They're trying to soften the blow, maybe hoping investors just skim the headline and don't, dig too deep into the bad news.
So it's like putting lipstick on a pig, basically.
Exactly. And this wasn't just like a one-time thing. The study found this pattern like consistently across tons of different companies and earnings announcements.
Okay, so I get why they'd want to make things sound good. But why focus so much on the title? Isn't that a bit, superficial?
It might seem that way, but it all comes down to investor attention and how we as humans process information, right? These days, everyone is just bombarded with so much data all the time.
Oh, tell me about it. It's overwhelming.
Right. So people rely on shortcuts. A catchy, positive headline, that can stick in someone's mind even if the details are telling a different story.
Okay, yeah, that makes sense. But did they just, analyze the titles? Or did they actually look at the entire press releases?
They analyzed the whole thing. They broke it down section by section. And you know what's really interesting? They found that the sentiment score, so basically how positive the language was, it tended to decrease as you read further into the press release.
So they're front-loading all the good stuff, hoping to, hook investors early on.
Precisely. It plays on our tendency to pay more attention to the beginning of a message and kind of zone out as it goes on. But here's where it gets even more interesting. To really figure out if companies were doing this on purpose, right? The researchers, they actually did this really clever thing. They compared the press releases to a couple other sources.
Oh, cool. What kinds of sources?
Okay, so first they looked at Wall Street Journal articles, covering the same earnings announcements that the companies had put out their own press releases for.
Makes sense. Those journalists, they're supposed to be objective, right?
Exactly. They're not trying to pump up a company's stock price or anything. So anyway, they looked at those articles and you know what they found.
Lay it on me.
The journal articles, they didn't have that same consistent positive bias in the headlines, even when the company's news was negative. They were much more neutral.
Yeah, that makes sense. I mean, they're just reporting the facts. But how could they prove it wasn't just like the way financial writing is? Maybe that style naturally leads to more positive titles.
Well, they thought of that too. That's what's so cool about the study. They actually took it a step further and used ChatGPT.
Wait, ChatGPT.
Yeah.
The AI thing.
Yep, that's the one. They used it to generate titles for those same earnings press releases. Like, what would ChatGPT come up with?
What happened? Did ChatGPT fall for the hype or?
Nope. Same thing. ChatGPT didn't create those super positive titles when the news was bad. It stayed pretty neutral.
So it's like the journalists are telling it like it is, ChatGPT is telling it like it is, but the companies themselves are the ones putting this, well, I guess you could call it spin on things.
Yeah.
But the question is, does it actually work? Do investors buy into it?
Right, right. That's the big question. Does it actually affect anything? And the research actually suggests, yeah, it kind of does. They looked at what happened to stock prices right after those earnings guidance releases came out. And they found that when a company had a more positive title, it was linked to this short-term bump in their stock price, even if the news wasn't actually that great.
So basically, even if you buried some not so good news in the press release, a super positive headline could still give the stock a boost, at least for a little bit.
Exactly. It really shows that investors, at least some of them, are influenced by that initial sentiment, even if it doesn't, match up with the facts all the time. But, and this is important, that effect wasn't the same for all companies.
Oh, how so?
It was weaker for companies that have a lot of analysts following them, the ones who are always digging into their financials.
Right. Those analysts, they're not just skimming headlines, they're doing the deep dive. Right.
Exactly. So they're harder to fool with just a catchy title. They're going to look at the whole picture. But for companies that maybe aren't as closely watched, or for regular investors who don't have time to, scrutinize every single detail, this kind of, almost like sentiment manipulation can really have an impact.
So for those of us who aren't, Wall Street analysts with tons of time to research every company, what's the takeaway? How can we avoid getting, tricked by all this?
I think the biggest thing is just to be aware that it's happening, Don't just skim the headlines and get caught up in that initial, wave of sentiment. Think critically about the language that's being used, especially in these earnings guidance things.
So it's like a reminder to read between the lines, to question those words, even if they seem harmless.
Absolutely. Companies are being strategic. They know how we process information, and they're, using that knowledge to try and get a certain reaction. But if we're aware of these tactics, we can make smarter decisions.
It makes you think about those companies that maybe aren't followed by as many analysts, right? Could they use this kind of language thing even more?
That's a good point, yeah. It really highlights how important it is for those companies to be, extra clear, They can build trust with investors by just being straightforward about how they're doing, even when things aren't, amazing.
So it kind of goes back to that idea of do your own research. No matter how good a headline sounds, you got to dig a little deeper. Look at what's really going on with their financials.
100%. Don't just take a press release at face value. Look at the numbers, think about the context, and then make up your own mind. That's how you become a smart investor.
Well, this has been fascinating. I feel like I've learned a ton about how companies use language to, kind of influence us. I'll definitely be paying more attention to those earnings reports from now on.
It's been great talking about this with you. And remember, knowledge is power, especially when it comes to investing.
Couldn't have said it better myself.
Yeah.
Thanks for joining us, and we'll see you next time.